welcome to the channel. My name is Zach. Please like and subscribe to this video and be sure to hit that notification bell to not miss any of my future videos. And let's see if this video can get 15 likes.
Hi there, my name is Zach.
Hello Zach. Hello Zach.
Hello Zecca. Hello Zeki.
Oh my goodness, look at the Bitcoin chart. Not to mention the ZCash chart. It's time to get into this video.
Welcome to the channel. Well, that's been done. Okay, so let's get into the charts. My name's Zach. It's 4:30 in the morning. Up bright and early. Decided to make an early video today so that I could give you a quick heads up on what you might expect for this Monday morning and for the new week. Bitcoin performing just at the tail end of the weekend, as I discussed yesterday. It took a little trip down to the low 30,000s. I don't think that we're finished with this. As I said yesterday, I expected it to. It just about got down to the 0.78 fib retracement, which was here. Let's see, how did it do? There we are. Just about tipped it. I think it did. I think we can say it did, and we expected it to pop back up to retest this 20 moving average within the Bollinger Bands, and this is on the 4 hour. I think that, to be honest, that might be all we get for the time being, because it's looking to me like, you never know, but it did test this trend line, as you can see, I think again it sort of tipped up to it. Maybe not quite. It did there on this 4 hour candle, on this 12 hour candle. Let's go back to the 4 hour. See what happened there. Yeah, there you can see it. Hit the moving average. It coincides with this trend line that we've been talking about, and I think really we are going to mess around here for a while, but effectively we're ranging and I think trending down. I think this all just does tie in with the narrative I've been talking about of us maybe going for another test of these lower levels around 30,000, 32,000, which could all tie in quite nicely as part of this Wyckoff accumulation that we have been looking at on at least on the daily, and I do also think that there's room to, now I think, and you can see, and let's have a look over here at ZCash while we're, no, we already have it up there. Okay, and we can see the same kind of thing took place. On the 4 hour we had, I think when I spoke last we were down around about here. Maybe we were looking at the 1 day as well. Maybe not. Anyhow, on the 4 hour, as you can see, we've tested the range, tested the moving average, and I think we're likely to take the lead from Bitcoin once again. It looks like it's coming down again. It doesn't look like there's too much more upside. I could be wrong, but I think in either case, whether we're talking about Bitcoin or Zcash, I think really we need to be looking at what happens in traditional markets. A lot of people have been talking about here we are on SPY. S&P 500 has taken a little bit of a tumble. Stock markets took a little bit of a tumble at the end of last week, and a lot of people have been talking about this sell-off here. We saw gold sell-off last week, and also people have been talking about this trend line, which goes back to March 2020. Here we are. Here's the coronavirus dump, and And then the Fed obviously printed money hand over fist, trillions and trillions of Corona spending, and we've basically been off to the races ever since. So a lot of people have been talking about this trend line, which has remained intact. I've seen some people drawing it, and I've seen some people drawing it, I think, too close in, like, you know, kind of up here. And to be honest, that's not what I would do, because as far as I can see, I don't actually think we're in that much danger. Well, I mean, we are in that much danger because this is only happening because of the untold levels of quantitative easing that have been unleashed upon the world. And so, yes, there's danger, but in terms of a broader stock market decline, I'm not actually sure we're there yet, because if we're looking on the daily, and if we draw the trend line as I've done, now we've got these three touches. Once here, just after the Corona dump, and I think this, we could say, is the retest of the danger zone, the initial test of this new uptrend that was fueled by the easy money that was unleashed after March 2020. After this, I would argue that we haven't actually come back to seriously test any particular downside, other than once, twice. You could maybe say here a third time, and perhaps here will be our next little effort. And what do those points have in common? Well, if we pop onto the 2-day, we can see a bit more, because on the 1-day chart, it looks on the 1-day chart like we well, look, you can see we're testing the bottom end of the Bollinger Bands here. We've tested it here, we've tested it here. So it seems like we're testing it all the way up. But this is only on the daily. But if we look on the 2-day, and then if we look on the weekly, effectively what we can see is that on the 2-day chart, really ever since March 2020, we have been ranging between the moving average on the Bollinger Bands and the top side of the Bollinger Bands, the top upper boundary. On the one time in October, the two times, once in October and later on here, where we did actually test to the downside of the Bollinger Bands, we immediately broke back above the moving average and tested the top side of the boundary again, and ranged between the moving average and the top side of the boundary ever since. And on the weekly, we've never actually broken below the moving average, and you can see that in terms of the Bollinger Bands, we've effectively on the weekly been ranging in the top part and in the upper boundary of the Bollinger Bands, never breaking below the moving average. And the two times that we have had a pullback, a significant pullback during this uptrend, have merely tested the moving average, and after which we've continued to trend upward in the upper boundary of the weekly Bollinger Bands. So I think fairly strong uptrend still. So yeah, I think on the 2-day, it shows us it gives me the most confidence. This looks to me like makes sense. We tested the lower end of the Bollinger Bands on the 2-day here, testing it again here. We tested it here. I can't really see that this pullback is anything more than that. It's a test of the lower boundary. We have crossed to the downside of this moving average, and so I will expect a price target of down here at 409. I imagine we'll get there, but after that, I think expect a bounce. I'm not. Let's see. I mean, I can't really see that there's anything. I can't really see that there's any reason from a technical perspective why we would expect anything other than this. Even if we look on the weekly, it's there's a higher probability that that we rally from the 20 moving average in the middle of this Bollinger Band, and that is at 402 ish, something like that, 408, whatever. So again, and I think if we see this happening tomorrow, this is going to be a risk-on environment once again. The other thing we should look at is DXY, and again so the dollar index does give us reason to again consider that maybe if we look at what's been happening over the last few days, we've had this sudden absolute surge in the strength of the US dollar against this basket of currencies, and that's not great news for Bitcoin. That's not great news for equities. That's not great news for any asset class, really. And I think the last time we saw this kind of a move, especially at the RSI on the 4-hour. Let's see. I think the RSI I don't have the 8-hour on this chart, but look, it's up in the 80s. I think the last time it was like. I think it was the last time we see it some sort of that high is kind of like back in, I don't know, like 2008. Anyhow, and we know it happened in 2008. Not the last time we saw the RSI that high, but the last time we saw the RSI shoot up from such a bearish position. In such a short space of time, so we could infer that it is risk off and time to get very worried about your Bitcoin positions, time to get very worried about your equities positions. But I tend to think, and again, look at the Bollinger Bands. Look, here we are on the daily. We've gone bananas. We're right outside the upper boundary, but already looks like we're going to, on the 4-hour. Looks like we're going to come back and test this moving average, and I just have the MACD on the 4-hour starting to come down. I think it's going to. I think there'll be a bit of relief for anyone who's risk on at the moment. I'm not sure that it's time to run for the exits just yet, and so we'll see what happens tomorrow, properly, or today later, properly. But I think for the moment, in terms of what does this mean for Bitcoin? I think what this means for Bitcoin is that there are signs here on DXY, over on DXY, that there are worrying signs. There are worrying signs here on SPY, and so yes, I'm sure this will cause concern, but the overall situation greatly different than it was here. I think they're still printing money hand over fist. I think this trend will remain intact, and I think they're still printing money hand over fist. So I think that this is likely to give back some of its gains, and I think that means that for Bitcoin, there is some short-term. There are short-term headwinds driving prices lower. Will this be enough to drive prices down to the 20,000? Maybe down to 20,000. Maybe we get a wonderful buying opportunity down there. But for the moment, I will remain focused on 30 and 32,000. I think that still the highest probability outcome is that risk assets like Bitcoin, by itself, are to be sold off. Moderately over the coming days and maybe weeks, as people reassess their attitude to risk. However, I think that we have more upside still in the risk on trade, and I think that's where we find yet again a flaw, a strong support around 30,000, 32,000 levels for Bitcoin. It might be that we tip down lower, and as I say, if we get down to 20,000, buy it like it's going out of fashion, because unless you can see that something material has changed in terms of what you're hearing out of the Fed, something has actually changed, then I think we should assess the situation as we have been doing for the last year, and that is that the monetary debasement of the dollar and of the pound and of the major world currencies continues. Therefore, the risk on play continues, and any dip such as this seems to be should be bought up, and just as it was here, and this kind of dollar strength in the dollar, I think, is likely to wane unless, as I say, unless something fundamental changes, and I don't see that it has. So for me, this is a buy. 30,000 is a buy. 28,000 is a buy. If you're lucky enough to get 20,000 Bitcoin, it's a screaming buy opportunity. And so yeah, I think that pretty much sums up what I wanted to say. We will obviously see in a few hours, and I may be forced to eat my words, but that's what I would expect. And so far, in terms of Bitcoin, we do seem to be following the path I talked about yesterday. So let's have a plan and let's stick to it. And I think that is all I have to say for now. So happy hunting and goodbye. See you next time. Oh, and smash the like, because I think I'm supposed to say that again, and turn on notifications and ring the bell, and please do subscribe. Thank you very much.